All right, guys, here we go. I want to do a little continuation video, kind of a part two to the previous one regarding Gareth Soloway's video over at In the Money Stocks regarding we may not see an all-time high again in the S&P 500 and NASDAQ, within the next 15 years. But let's break this down a little bit more right now. From this little bottom here on the NASDAQ, and this is the monthly chart, each candle's 1 month price action to the run up was about 14 years. And then from the high to the low here, which there's a couple of interesting coordinates here. We had about a 80+% pullback. Uh, that's huge. Okay, needless to say. And even if you got in, well, back here, or if you got in on the third hit of this trend line and that close above the 20 here, we still came back half of that. So all this basically was building your multi-generational wealth. And then this part here was losing your multi-generational wealth. Not all of it, but a considerable amount actually. So that's why it's very important to know these charts, to teach your kids and grandkids, because what takes, two, maybe three generations to accumulate, to earn, can be lost in one. But anyway, we came down to about the 50% zone from that breakout to the pull down, half of it. And then the 200 that helped as well. And then we, took off once again. And we've been pretty much on a 20-year run here. We've had our ups and downs, obviously. And then right now we're, below the 20, of course, and looking to see where we end up. Now, if we, half of this move from the low here to the high, half of that, zero point 0.5 fib, is right in here, actually under the 200, which is not good. But let's just say we do similar to what we did, the previous run up, run down with those big numbers. This about a 75%, pullback into, which actually is pretty good, into this consolidation zone here. And it was more consolidation as opposed to distribution because we took off again. Okay. Not that there wasn't institutional selling here, just that there were more, at the end, obviously there was more buyers and sellers. And then it kind of lines up with this, high pivot, little double top area, uh, you know, previously, but going back to, 2000, this big run up here was really, that was the U.S. stock market's crypto run. Okay. Just uh, seriously, there were a lot of multi-generational wealth made here, millionaires, billionaires, whatever. But there was a lot lost too because they thought the hype was going to keep going, just, like a lot of people did in 2017 with crypto. But anyway, if we pull back into this area, that's about a 75% move. I think there's going to be a lot of, you know, price movement in the meantime, not necessarily all to the downside. And that's why I think we haven't necessarily, uh, you know, taken out the all time, I'm taking out meaning to the downside and not ever coming back up. I think we could, at least retest these all-time highs. Okay, if not, surpassing them, because we do have, moving averages in here, high pivots, low pivots, other areas that were previous resistance that will now be support. Should we come uh, down a little further into this zone. And then let's look real quick at S&P 500. And we're going to go back pretty far in time here and look at the drawdowns. Okay, a 28% drawdown, but see, very quickly it recovered. 36% drawdown over an extended period of time. And then what I mean by recovery, we started, hitting support, getting buyers come in to push us, up and over that zone. And then right here, this, let me think, what is that, about 7 years here uh, regarding this stretch where we were pulling back and down for basically, might as well say 50% drawback. It took that long for us to get there, but, very quickly, even though to take out the previous all-time high. It took forever. Basically, what was that? Over over 2,800 days to get to take that out. But of course, it came back in. But what I'm getting at is that each time we had a big drawdown, uh, it very quickly recovered. If you remember that first video I did, I talked about that two down, one up. Well, here we are in S&P 500, two down, two red monthly candles closing inside this green bullish engulfing candle, and this one took it out. And then again, high odds, high probability, you continue, and of course, you pull back in, hit the 200 and the 20, get a little support there. The 20 saved it, come back up, retest. Actually, made a low, a little bit higher low here on this pivot, higher low there on that pivot, and then another 27% down, uh, which is a big deal. And don't get me wrong, but pretty much a V-shaped recovery out of there. Okay, so you're going to recover uh, basically one of three ways, and the second one is really the best. You have a V shape, you have a W, and what you want on that W is for this pivot here. You have a low pivot, higher low to come back and test that 20. The two most important uh, moving averages on your um, chart of the 20 and 200. I don't have time to go on that right now, but they are. And then there are absolutes in the market. People say there are no absolutes. There's a bunch of absolutes. They just don't know the charts. And one of them, I'll just tell you right now, is the 20 and the 200. Absolutely 1,000% for sure. They always come together and then they spread far and away from one another. Then they come back together, and that's just the cycles of the market. Okay, you don't need all this voodoo cycle stuff. Just watch the 20 and the 200 on any timeline from a 2 minute timeline to this monthly chart. Okay, and price will either, when the 20 and 200 come together, price will either drop down on the 200, and the 20 being a lagging indicator, like all indicators, it will follow price to the downside or vice versa, like we see here. And then right here, we had a 36% pullback, in 80s, 87, excuse me, and then 19% here, and 90. Well, you get the drift, and then boom, like the next month or so, we were back on track. Did it take a little while to take out the previous, all-time high? Yeah, but if you were reading the charts and knew kind of what to look for, one of the things I'll just go ahead and tell you. Uh, you want to get in and around the 20, and then start getting out away, far and away from the 20. Okay, when you're way up here, far and away from the 20, it's going to come back. So that's another absolute. Absolutely 1,000% for sure. Price will either consolidate sideways and or pull back into the 20 and allow the 20 to catch up. Right here, sideways consolidation, several months, and as the 20 kept coming up to get close to it. Okay, then finally it blew to the downside. Okay, and then let's see here, we had a 50% drawdown here in 2000, starting in 2000, the big .com debacle. And look at that, that's just like the crypto market. Boom, 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 just explosion, acceleration to the upside, and everything held the 20. See, the 20, you just can't beat it. And then right here, even if you got in on the 20 and got out on the 20, look at the multi-generational wealth you made and the multi-generational wealth you saved and then bought a lot lower. And here we go again. Okay, it's not rocket science, or I couldn't do it anyway. And then 474 days here across, and see, we made a high and then a double top here, fell back in, 57% pullback, in that 2008 when all the banks got flushed out, and then boom, took off again. Okay. So you can see that, the pullback situations. Now, right now, are we in a pullback situation? Yeah, well, yeah, of course. But, actually, it looks pretty like a pretty normal pullback. And then let's put the percentages to it. The all-time high to where we have pulled back 27%. Even if we come halfway back, that's 32. between the low and the high. And yeah, we could definitely do that. But really what I'm looking for, worst case scenario is that we come back into that point, the golden retracement point, 618 fib. And then if you look across there, the more factors you have across there, the better. So we have the high pivot, consolidation, consolidation here, bounced, and then came back through it, finally got above it again. So this area, least on the S&P, around that, let's just call it 2,900 because the market loves those whole round even numbers, is significant. That's important, okay? We can't take that out, but if we do, then we have this double bottom, well, two of them right here from the COVID, slam down situation. But let's look at even the pullback to there, to this low pivot in this area at 48%. Yeah, just call it 50. So yeah, we get it, pull back pretty good, but we've seen it before many times pulling back in those percentage zones. And yet, see right here, and then yet we were able to very quickly, almost like I showed you earlier, V-shaped recovery out of those situations. So yeah, I don't think it's going to be the end of the world. The world needs a gambling casino in order for the emotionally, I don't know, people that trade on emotions, which is hard not to be honest with you, but the stricter, self discipline you have and trading discipline, the better you're going to survive. So what it is, what the casino is, and that's all it is. Um, anyway, you can if you know how to play the game, you can play it and profit from it. But when we start, coming down here, especially losing the 20s, you see we're just trying to get back up into it. Here we haven't, completely blown past it. Did a pretty quick recovery here over the last couple of months. Not to say we can't, that we're going to go a V shape here, straight back to all-time highs, but it just shows you that, the fib line, this high pivot zone here, two down, one up, another explosion to the upside. That was a real critical area where, institutions came in and bought at that time. And yeah, they could be unloading on every, rip to the upside, unload, and then, buy the dip, so to speak. So we're going to keep in. I don't think it's, by far, the end of the world. If you just, follow the charts and keep your, level head about you. And we'll see right here. Let me bring that. Let me clear this off so you can see it better. The 50 right here came into it, didn't hit it. Came into it here, came into it there. So far the 50's been, pretty good to the S&P 500. And then even if you lose the 50, you have the 100. Coincidentally, surprise, 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 down here, at this high pivot zone, consolidation zone. Of course, it's going to be a little bit rangy, probably to the upside a little bit. Should we, trade a little bit higher and come back down if all that makes sense. So, and then, you have the 0.618 fib. So you have three factors. You have two or more, two factors. You have an 83, 87% chance of, that situation working out according to your thesis. Okay. If it's to the upside, then 83 to 87% chance it'll run. If it's the thesis to the downside, the factors, are on top of the price and price hits that resistance in 83, 87%, you're going to, roll over to the downside. Okay, guys, hang in there. Thanks so much, and we will see you on the charts.